Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with Michael, who's head of all our written research over on the website. You've been doing some fantastic stuff lately, particularly on all the Bitcoin DeFi-backed stablecoins. And in a world of CBDCs, we need decentralized options to fight back. But more and more of crypto news seems to be TradFi, as we were just talking about pre-show.
Super TradFi at the moment, and I think obviously that's what's driving the market. And we see Bitcoin dominance still so high, but there's not a bid for micro caps like it was last cycles. People throw a dartboard at anything down the risk curve, and off she would go eventually. But yeah, still plenty of opportunities.
Yeah, and I'm not sure if you've got the price chart there to start off with, Michael, if you want to open up and share your screen. But man, ETH, what a run. Like when everyone thought it was dead a few months ago and was saying there's no way it's dead. It's just, the narrative will change and blah, blah, blah. And we had a wick down to 1200 and here we are back at 4.6.
I almost feel a little bit dumb because the same voices always coming out like they do every cycle for the last three anyway, saying ETH's going to get flipped, it's done, it's old, it's slow, and every single cycle, everyone starts to believe it. Um, and I'm not going to lie, like I did get a little bit concerned there for a moment. But yeah, I just think that you cannot assume that Ethereum's going to get flipped until it actually happens. But yeah, she'll break her all-time high at some point here. Just a matter of time, and then price discovery is going to be interesting. That's for sure.
Yeah, we've got plenty of news from some of the other top 10 coins to get through as well.
Well, I think if we chug in, the big one now is that again more just institutional money coming into crypto. So if you're Australian, this is effectively America's version of super funds can now hold ETFs or crypto assets as well. So this is just another bucket of money which has now been opened up to crypto investments. Again, executive order from Trump, just the institutionalization of crypto.
Yeah, and I think Trump and Trump companies and family and that now own like $2.5 billion worth of ETH. So, like, as the president and someone that loves making money, a businessman, you're probably going to reasonable argument he's going to keep things favorable for ETH and want that price to keep going up. So, yeah.
Yep. It made me sort of think a little bit about like, you know, if we look at Bitcoin, you can see the charts here. So our current cycle is the white line. Um, so we've still obviously this is time since halving. So you can see how like kind of flat line it's been a little bit since like the previous cycles where we've had these massive swings of up and down, up and down. Like it's been a pretty constant, steady grind. And so I'll be very interested to see what this does for like our 4 year cycle thesis and the 4 year cycle narrative, whether that's still alive or whether or not it's just become so big now that any massive sell-offs will get bought up by people who have never been here for a cycle before because they're TradFi investors. Interesting though.
Yeah, well, we kind of outlined my thesis that as the market matures, it's going to smooth out the peaks and the troughs, and that white line's looking a lot smoother as the smaller,
Smoother.
more volatile assets. So if we can keep treading along on that sort of trajectory over the next year or two, that's happy days for sure. It's healthy.
Yeah, I mean, we did sort of look at like in previous cycles, you look at what was driving it. So 17 was ICOs, 2020 was DeFi summer. And for those that weren't here for that, DeFi summer was effectively just the first time we had DeFi protocols offering crazy yield where you could go and get 3,000% on your locked tokens or whatever it might have been. And then 2021 was just that huge NFT craze where you've got like, all the NPCs of TradFi media, like your late night Jimmy Kimmels and stuff like that, just buying JPEGs with no utility for obscene amounts of money. I don't know if he specifically did, but those types. Yeah, that's what drove it. But what's driving it now still is very much off-chain activity, like off-chain regulation, off-chain buying, off-chain accumulation, well, still accumulating on-chain, but off-chain events. And so it'll be interesting to see how that translates moving forward to like when everything does go back on-chain and DeFi really starts to get integrated and lending and borrowing platforms is being used by TradFi. And yeah, it's just everything's going on cards, like payment cards for Bitcoin. Yeah, very interesting about where this goes as far as the
Yeah.
cycle.
And you'd probably add what last year was about Solana meme coins type of thing.
Yes, yeah,
And still, like, I still think the biggest opportunity is Bitcoin layer twos and Bitcoin DeFi still.
yep. Yeah, absolutely. Well, speaking of, if we wanted to just have a little bit of a precautionary tale here, like I think there's always been a little bit of a sentiment that Michael Saylor has become a little bit of a vector point. Like if his financial engineering maybe goes haywire, then that's probably cause for concern. We saw it last cycle. It was these centralized actors that were using like neo banks that were taking in your crypto and they went bust because they were over leveraging themselves. And so that's probably now with all of these treasury companies is probably the huge opportunity, but also the cause for concern is that what happens if they start getting over leveraged and just massive amounts of Bitcoin? Like, I don't really want to live in a world where Michael Saylor owns 15% of the Bitcoin supply. Like, um, yeah, so it's an interesting catch 22 there. But this is an interesting article for those that want to have a read. But it was just pretty much talking about how, this is the vector point now. Like, any centralization of capital is I guess, a potential downside for price. So
Well, if we
watch this
can,
space.
one thing to learn from history is part of what happened with the central banks and that back in the 1920s was that deliberately, jacking up of interest rates and causing all those failures so that they could buy up all the small banks. And so obviously the translation here 100 years later would be if we have all these companies and they're all getting in late in the cycle with these big Bitcoin treasuries and minting against credit or whatever shares they're issuing to buy, and then BlackRock or someone, one of the big boys comes in, drives down the price, then they can bankrupt all these companies,
Yep.
get all the Bitcoin that's on their balance sheet, and this is just that centralization of power playbook that we see time and time again throughout COVID and throughout history.
Yeah, debt is an attack point. It's a vulnerability in your house of cards. So and Sailor's been pretty clever about it, but it does make you pause a little bit.
Yeah.
So again, speaking of XRP, having here total value, 175 million, but they're third in as far as FTV goes. So, I mean, this is one that you were kind of you got your ears peaked up about. Like, I think, you know, at what point do actual like on-chain metrics matter and valuations is another probably interesting point here.
Yeah, I mean, for a lot of protocols, people start to say, oh, look, the TVL or the Treasury versus the market cap, it's undervalued now as it's like, maybe a one-to-one relationship. But XRP with 200 million, let's call it, versus 200 billion market cap, it's 1,000 to 1 ratio. Yeah, so like we've said, they're doing some good things and there's obviously traction there, but is that actually going to translate into this tokenization and is that a fair value? And just one thing we said to like at the high net worth clients the other day, like if you've been a long term XRP bull when you were accumulating at 20 or 30%, like I think you have to, you've done your 10, 15x now, take at
Yeah,
least that initial investment out so you've got a free ride. But some people still seeing, XRP is going to $500 and all this type of thing. That's just,
yeah,
you can't get oh, I can't even pronounce.
fanciful. Yeah,
Yeah,
fanciful.
can't get too crazy if, and taking your profits and all that stuff still applies.
Yep, very much so. So Stripe coming out with their own L1 as well. So again, merger of everyone now pivots to crypto. Crypto companies are trying to get more TradFi. So Stripe coming out with Tempo, blockchain with VC paradigm. So this is another like just onboarding for stablecoin payments. PayPal probably won't be too far behind here, but you can see like everyone sees that stablecoins is the best way to transfer funds. And then you get into Circle as well, obviously launching their own L1 called Arc. So again, very, very interesting. All of these players, they all want to capture that value on their own chain. Everyone sort of still bends the knee to Ethereum here, but it's the EVM compatible. You've got to go like flies to honey where the power source is. But again, I feel like I do this every week. There's just another L2 or L1 that launches.
Yeah, and again, having their own chain, I'm not sure how decentralized, they're going to make that being fully regulated. And is this just another step in that direction of the US CBDC?
Yeah, yeah. Well, yes. Again, speaking of, so Monero had a 51% takeover attempt. And for those who are unaware, effectively, if you can control 51% of the hash power of a blockchain, you can control what's happening with it. You can double spend, you can edit the ledger. And so this was an attempt to take over the Monero network. And again, those that are unaware, Monero is like the top privacy layer, privacy blockchain where you can't actually see transactions. If I send Alex funds from my Ethereum wallet, then he now knows my Ethereum wallet. He knows what's in my Ethereum wallet. Monero blocks all of that. But yeah,
Yeah.
an attempt takeover.
And there was one of our members has been messaging me about this Qubic protocol for a year or so now. It's just like an artificial general intelligence, and with the spare compute, one of the things that they've decided to do, like it or not, is attack other networks. And yeah, I don't know if you want the biggest privacy coin with all the badasses that use it? Do you want them offside type of thing? So hey, this is interesting to watch play out either way, but something that's been around for as long as Monero and that type of thing, you'd think they'll figure out a solution here.
Yeah, I think this will be another narrative which will pop off again, like privacy coins, especially as people become more mainstream with a lot of the big L1s. There's going to be another narrative here. Like I mentioned, the Kusama chain, which was Polkadot's live testnet, is got a whole rebrand and pivot on right now to be this full privacy pirate layer. There's going to be other chains coming out as well, which will be very privacy focused. I think I saw a fork of the Firedancer client in Solana that was going to try and be a more privacy layer. So there's teams out here that are just going to take the tech and try and use it for that cypherpunk vision. But I think these things are important. Like we need to be able to still be able to control our own destiny online.
Yeah.
So again, Pendle, which we've always seen was a big player in the space, so they've launched a new platform as well, where they're just trying to attack the whole not Stripe, sorry, the whole Swift model, and just trying to have like huge amounts of stablecoin settlement. Again, another like huge investment. Pendle has been a bit of a darling of this cycle, just having some massive gains over the last week as well. So they're absolutely ripping right now, and they another really cool product that they just got launched and unlisted. So I'd pay attention to Pendle, and I'd pay attention to what they've got cooking here. Another one I think was really interesting as well. We've got Tom Lee buying more and more and more Ethereum. So I mean, this protocol here is just out the gate. He's now the Michael Saylor of Ethereum. So I'd be watching this space here. Again, another thing which you've been paying quite a lot of attention to. Ironically, BitMine now is an Ethereum company.
Yeah, the big two. Hey, but no complaints from ETH holders if we get 20 billion casually. They have to time weight in. They can't just make a big one-off purchase. So yeah, with all this coming, it's just good. But is it? Let's make sure we don't get over leveraged. And even though I love Ethereum, I just think it's still a lot more dangerous building these treasuries as soon as you go smaller down, more dangerous than Sol. And then if we're going to see an XRP treasury, it's like we know that Bitcoin is that, ultimately the most money that's going to be reliable over a long period of time. So can these other assets with treasuries that are more likely to maybe have a 75% correction than Bitcoin, how's that all play out? So that's just my cautionary tale there, I guess.
Yep. Well, we've got a very interesting couple of weeks ahead, I'd say. I'd be very curious to see, like, over the next little bit, Bitcoin is going to go back into price discovery. So is ETH. Just whether or not this straight lines up from here, or whether or not it tops out. So again, be prepared, everybody. Make sure you've taken your profits. The last thing you want to do is become on paper rich and then round trip it all the way back down to below your starting point and have to sit tight for an extended period of time. I've been there. You don't want to do it.
Yeah. And we've obviously got all those indicators, so telling our members when we think that top is in for the market cycle. So guys, head over to the website for the free newsletter, all our research or our high net worth services over at nuggetsnews.com.au. And Michael, we'll talk to you again next week. Cheers.